Thank you, Carol. Thanks for that. Thanks for your help as always. Hi, everyone. Hello, everyone. Happy Monday. This is the beginning of the week, and I'm very excited to be hosting this show. As always, Vctv, which is the venture capital TV from LATOKEN, where we connect investors like yourself to great startups in our community. So today we start our week on a topic which is very close to my heart, and of course to all of us currently because of the pandemic that the crisis that we are facing right now. So it's about impact investments, it's about sustainable investments. So in the wake of COVID-19 crisis, as we face more uncertain future than any time in recent history, corporations, governments, and the stakeholders all acknowledge the interdependence of capital markets, economics, environmental constraints, social trends, and human behavior. So today's topic, we're going to discuss about the investments in the space and sustainable investments and impact investment. So today we have speakers from all over the world. I'm very excited when I have such a great panel from all over the world. So I have Max Song from Hong Kong. Hi, Max. Welcome back. So basically, sorry about that. Let me just introduce myself. Sunny Mohanty. I'm the regional director of LATOKEN, and I'm based here in Singapore. So today we have Max Song from Hong Kong. Welcome back. Then we have Saul from Israel. Hi, Saul. Nice to have you on VCTV. Then we have, I'm trying to remember. Oh, sorry, I forgot. Charlie. Charlie is from Singapore as well. Hi, Charlie.
Hi,
Welcome
thanks for having me.
And then I have Stanley from Netherlands, Amsterdam, who's originally from South Africa, stuck in Netherlands, if I'm correct. Okay, and then last but not least, we have Antoine from London. Hi, hello, welcome to VCTV. I'm really excited to have to be in the show and moderating the show because the kind of speakers we have from all over the world. So, okay, I would like to start with a short introduction of each of you. I'd like to start with Charlie first. So Charlie, please help introduce yourself and your journey, the company you represent, and your VC journey. Yes, thank you.
Sure, can do. Thanks for having me again, Sunny, on the show. I really appreciate it. A brief background about myself. I've been in the VC game for quite a few years now. Cut my teeth in the industry in Singapore doing some deep tech investments there, then made my way over to the Middle East to work for a venture capital company whose investors were Omani Sovereign Wealth Fund. And I recently made my way back to Singapore again, back in the deep tech sphere and looking at clean tech investments primarily.
Oh, wow, excellent. Welcome. Next, I would like to have Max. Please, Max, help introduce yourself.
Thank you, Sunny, and pleasure to be back here with everyone. Max, I sit in the family office in Hong Kong. The family office is holdings in insurance and telecommunications. I joined them about 2.5 years ago to look at the emerging technology sector, so IoT, AI, and blockchain. Before that, I briefly did a stint as a healthcare investor, looking at late-stage healthcare deals. And before that, I was a data scientist in Silicon Valley, looking specifically at financial services. I'm very passionate about climate change as an action area, and I believe that there's a huge amount of opportunity to use the new exciting technologies and apply them to solving the greatest problem of our time, and also generate great returns doing it. Thank you.
Excellent. Thank you, Max. And welcome to VCTV again. Okay, next we have Saul from Israel. Hi, Saul. Welcome to VCTV.
Hi, Sunny. Thank you. It's a pleasure to be here with such a great group of colleagues and peers. Thank you for having me. So my background is I've been in the startup venture capital world for 32 years. I did 7 startups. I did 6 years of turnaround work. I did 3 years of social impact a while ago. I'm in my 8th year of venture capital. The LO fund is a new fund. We launched it recently. It's part of a family of funds that is for-profit and social impact. So we're looking at early stage investing very locally here in Israel. Together with our for-profit fund, the LO fund, we're also starting a social nonprofit fund that's going to be called the Jerusalem Inclusion Fund. And the main purpose of both of these funds is to look at things within the world of social impact, particularly inclusion, employment, training, community building, with a focus on sustainability. We're going to take a hybrid approach that we'll be looking at both for-profit and non-for-profit or social return. So we're looking forward to a really great run here. It's something new, the approach, and hopefully it'll be successful. Thank you.
Okay, great. So thank you. Thank you for that introduction. And I really like that hybrid approach that you just mentioned right now. We could talk more about that later. So next who do I have? Okay, I have Stanley. Hey, Stanley, please. Hi.
Hi, everybody. It's Sunny yet again. Thanks for the invitation, and very, very happy to get the opportunity to actually share the story. Of course, I've been in the investment banking for about 20 years. I've been in the impact world for about 10 years, and currently I'm an investment manager for an investment bank that is focused on impact investment, and we've got about 4 billion euros under management. So our whole purpose is to look for renewable energy, agriculture, and inclusion type of institutions across developing countries. And I'll definitely look forward to sharing more of it with you guys over the course of the hour.
Excellent, excellent. Thank you, Stanley, for that brief intro. Last but not least, I have Antoine from London. Hey, please introduce yourself.
Hi, everyone. Very excited to be here today. Very excited to be sharing kind of our thinking with this great group of investors. Very briefly about myself, I'm Antoine Poisson. I'm one of the general partners of Antler in the UK. Antler is a pre-seed fund that has a bit of a unique strategy that we work with the entrepreneurs from day one, from before they have an idea, before they form their founding team, and we support them with capital, support network from day one all the way through. So in that sense, we ourselves have a strong impact component, being enabling talent to become entrepreneurs and to get on that journey, to create new solutions for some of the major problems out there, to create wealth for themselves as well, and to fulfill their potential through entrepreneurship. As a fund, we're also agnostic, which means we invest across sectors, and we have quite a few impact investments in different sectors. Before that, I was an entrepreneur, so built a firm about 5 years ago, headquartered in Singapore, operating primarily in India, and an impact-focused venture because we went after the medical emergency response in India. So primarily ambulances and just solving for the first mile and the access to hospitals to get care. So build that, scale it to Series A, and then moved on to the investor side of startup world.
So Antoine, I saw your LinkedIn profile. I was wondering, was it pre-COVID?
That's a very good question. We launched the business pre-COVID. So actually 4 years ago, and at a time where 13 different startups were trying to solve for that problem. 5 years later, I think we're 2 firms remaining on the market. COVID's been both a boost for the business, but also a bit of a slowdown. A boost because more people needed access to hospital. And I think COVID highlighted the need for high quality ambulances, for example, high quality access to care. So on the one hand, the business went up, but on the other hand, less people also went to the hospital for kind of non-urgent, non-important procedures. So the business has been doing quite well overall.
Yeah, I'm sure. I mean, good times. You know, when I saw that was, wow. I mean,
all right. Well, we launched we launched Bangalore, we launched Raipur, and we launched Mumbai since the beginning of the COVID kind of situation in India.
Awesome, excellent. Welcome. Good to hear that. Thank you. So we're all set now. So we've got a round of introductions done. Now it's my time to ask some questions around investments. So I'd like to ask Charlie. Charlie, what are the current trends you see in impact space, sustainable space? I mean, obviously we've been talking a lot about impact investments. I mean, I have attended many conferences that obviously with the theme of impact investments or sustainable investments, but how has COVID-19 impacted impact investments? What are your thoughts?
Okay, I think that it's accelerated the attention towards impact investing. I believe that there has been, since COVID and a chance for a lot of companies to rethink their strategies, there's been a lot more attention paid for impact investing in general. A lot of what we've seen, both in the Middle East as well as in Singapore as well, where I am now based, we're seeing there's a large emphasis on governments making sure that there's a resiliency plan.
Yeah.
I think that one of the biggest things that COVID has uncovered is the weaknesses in a number of different areas, including supply chain and food and access to certain amenities and power and basics that can be supplied by quick fixes through impact investing.
Yeah. All right. So yeah, that's right. I mean, obviously, COVID has exposed many things. So what are your recent investments, if any, in the space in the last 6 months?
Sure. So actually with Ecolabs, we're uniquely positioned where we actually represent a number of interests from a number of investors. And so a lot of the activities as of late has been largely focused on the maritime industry. It's because the unique positioning of the regulatory landscape
Right.
in the maritime space and how regulation has a large impact on the adoption of clean energy specifically.
Right.
Because we're focused on clean energy, that has been our primary focus. We are largely driven by a lot of the decisions that governments make because for two reasons. One, government's one of the largest investors in deep tech, and a lot of our
Yeah.
business and outcomes are deep technology, hardware, heavy equipment sort of solutions. And the
Right.
second is because government has a lot to do with the regulation and the penalties for companies that don't follow those regulations. And so oftentimes clean energy can be, is normally led by regulation to penalize those who are not following, and then thereafter follows the startups. In this particular
So,
case, maritime is a fast mover.
yeah, great. So are you investing in startups in Singapore alone, or do you cover other regions? And what are your, like, what stage of what stage do you invest into a company, into a startup?
So traditionally, our activities are dealt with startups in the seed and Series A stage. We will be focused globally, so we've got a global mandate.
Right.
Because oftentimes, and you notice this in vacant markets,
Yeah.
especially clean tech being one where there's not a lot of options available, we
Yeah.
try and keep the geographic scope as wide as possible. So we have a global scope, and we're looking
Yeah.
at clean tech.
Excellent, excellent. Good to know that. Thank you, Charlie, for that.
Sure.
Next, I have Max. Hi, Max. So please talk about a little background about impact investment, the current trends that you see in the space, and your recent investments.
Yeah, definitely. So one, it's really cool to hear about all these global perspectives. At the family office, there's been a lot of focus on Southeast Asia. There's been, a big insurance play there, building a cross-regional life insurance company. And I think on the proof of that is also an exploration into like the whole idea of digital finance and where that sort of will continue to evolve. Thankfully, the core assets, I think, of the group have largely been doing okay, during the COVID crisis. But I think where I'm personally very excited about is actually, this transition where regulations and rules in the traditional financial sector are changing to accommodate for the necessary reporting of ESG statistics. Hong Kong is going to see this huge wave of listing over the next few months and even years. As the U.S.-China trade war intensifies, a lot of formally listed or hoping to list on U.S. market Chinese companies are going to come and list in Hong Kong, and Hong Kong Exchange actually has implemented their own strict, growing stricter ESG requirements. So if you want to list and stay listed in Hong Kong, you need to actually obey these disclosures. And I remember just a few weeks ago, I was on a different speaking panel with a listed blockchain group, right? So they're, I think, Hong Kong's largest blockchain company with $3 billion market cap. And they shared that because of becoming a public company, they've had to respect these requirements, and that's actually initiated their whole ESG exploration. So I think it's kind of cool how these rules and regulations are forcing traditional companies to actually pay more attention, right, to what's happening there. In terms of personal and sort of outlook on this, I'm very excited about the Chinese compliance carbon credit market. I think that's a place where there's a lot of opportunity and space for development. The European carbon credit market is about $50 billion. Chinese compliance market, will at least cover about twice the size, will be twice the number of CO2 tons covered, right? So roughly about 3.2 billion tons versus the European 1.8 billion. And the rules and regulations have been slowly coming to shape over the last 5 to 6 years. And right now, it seems like the Chinese government really wants to drive this forward. And just to place this into the context, right? Because I think there's people who've lived and worked in many different types of countries out there. Like climate change is one of these things where having a lot of people reach consensus may not actually be the most effective solution, because there's a lot of vested interest. A lot of people with a lot of money would lobby to keep the status quo the way it is. So in this case, having a very strong central state that can actually decide to move ahead despite business pains, I think has certain advantages. So I'm sort of very closely monitoring the evolution of that sector. And corresponding to that actually is the power sector. And so there's this other really cool opportunity, which is the liberalization of the Chinese power sector. And it's a little bit maybe too technical for the general audience, but if you look at the US and Europe, there's actually 3 sectors of power. There's the generators, there are the distributors, and finally the retailers. And US and Europe went through this evolution, right? This evolution gave rise to ICE, the Intercontinental Exchange, which is probably the largest listed exchange in the world right now, 50 billion market cap. And in China right now, there's an opportunity to build a similar, there's a similar shaped hole, right? So who's going to fill that hole is still TBD, but that's, I think, a really cool sort of policy created opportunity as well.
Right, Max. The carbon credit, I would like to ask you one question after I spoke to other speakers about blockchain technology, because I've come across many startups who have contacted me and they would like to do fundraising, and they're based on the blockchain technology. So let me just come back to you with that. So next, Max, Sol, please enlighten our audience today about the current trends in the space. So what's the future holds, and what are your recent investments in the last 6 months?
Right. So I think that Charlie said it, well. One of the things that COVID has done is kind of highlighted the cracks in the systems of things that we're looking at, things that we take for granted. So one of those things that we're very interested in is sustainable food. Sustainable food is something, the current protein sources of, from animal proteins are really going to run out at some point. We're looking at alternatives. The alternative protein market is growing leaps and bounds now, and sustainable food is a big topic. So that's like on a broader scale. But one of the things that happened here, we've had some lockdowns here because of COVID in the country. We actually just started one last week. So we began a 3-week complete, near complete country lockdown. One of the things that's happened as a result of COVID has been the whole shift in how people work, both in terms of work from home and in terms of people losing jobs. I mean, companies have scaled back and a lot of people are out of work. So one of the things that we're looking at, by the way, I also happen to teach at the MBA level here in Israel. And I've had to get used to Zoom has become a godsend for all of us, right? We don't have to, we can have these kinds of events. We can have meetings online. We don't have to go travel. We don't have to be exposed, et cetera, et cetera. But I want to tell you something, when you're trying to teach a class of 100 students, it's not exactly easy. I mean, there's no interaction at all, and you don't get to know anybody anymore. So it's really changed the way we interact with one another. So some of the things that I'm looking at are specifically in these 2 areas are things like training. EdTech has been developing for quite a while now, but we're looking at stuff that has a bit of more focus on the training aspect. How can we train people remotely? And as a teacher and somebody who uses Zoom or has to use Zoom now to teach, I'm looking for something that, will kind of fix what's wrong with Zoom. and that is a little bit more of the interpersonal interaction, in a setting like this. Unfortunately, if everybody here were, like to speak at the same time, nobody would understand anything. But in the classroom, you can actually get away with that.
Yeah.
So you can have a different kind of discussion dynamic that you can't have here. And the question is there a way to create that or to improve this platform to allow something like that? So those are some of the things that we're really looking at: employment, sustainability, and things like that. Those are the main focuses right now. And of course, inclusion for the underserved communities of disabled people who, again, in this particular environment, are having a harder time than usual.
Wow, I really like, you're an investor, you're also a teacher.
Yeah.
And that's amazing. And I think you're very right. We are heavily dependent on these platforms like Zoom are not very efficient. We all know that. And when you're teaching to a student of 100 students, like 100 logins, it's going to be chaotic when you talk. But yeah, great points there. So you only invest into Israeli startups?
So we're looking primarily, right now, we're looking local. If we found solutions that were outside of the country that we could bring in that address the specific needs of things that we're looking for, we'd certainly consider that.
Oh, excellent. Awesome. Good to know that. Thank you, Saul. Thanks, Saul, for that. So next I have Stanley. Hey, so please talk about some current trends, how COVID-19 has accelerated the investments in the space, and because you are an investment banker, so your recent investments in the space.
Yeah, sorry. I mean, I think I would like to leverage on some of the things that Charlie said earlier on. I mean, the whole idea is that impact investing is going mainstream, and I think the idea is that now people are starting to think differently about the way they do things. I think, if I think about it, not long ago, there was the news. Now, JP Morgan has got its own impact investment kind of segment, which actually shows that some of those big banks are actually started to think more on the idea of impact investing than anything else. I mean, COVID, of course, COVID, that brings some challenges within the market. I mean, for us, what we do is that we try to invest in social inclusion. So our main task is investing in developing countries, and especially into financial institutions to enable them to finance and the underlying entrepreneurs on the ground in the local market. So one thing that actually woke us up a little bit is the need for more fintechs in order to be able to actually be able to distribute this funding at a more and a lower administrative cost. So those are some of the things that actually COVID brought to the fore, is the importance of technology. But one of the things that we also have to be careful about is that technology itself is not the solution. Technology is got to overlay an underlying practical ideology before you can actually use technology for anything. And that's why for us, we believe fintech, for example, overlays kind of the financial institutional model, which is banking. And hence, we think things like that are very, very critical in actually understanding how to move forward in this state.
Yeah. Oh, yeah, you very rightly said fintech is obviously very key in that space. So did I miss it? So you invest into developed and developing countries, right?
Yeah.
You definitely don't invest into startups.
Well, we definitely invest in startups because startups are actually our main targets. But of course, having a private equity fund in Europe and investing in startups in developing countries is a little bit challenging due to the oversight that you need to do. So usually we use the financial institutions who provide the financial services that this SMEs need in the developing countries. So we focus on startups, but we focus on startups more in the developing countries than the developed countries, if I can say.
Right, to the FIs. Okay,
yeah,
great.
Yeah, FIs.
Okay, great. Thank you, Stanley, for that. So last but not least, I'd like to ask Antoine to share his insights about the current trends and his current investments.
Yes, very happy to do so. So Maybe a bit of context before I deep dive into it. We, as a firm, we operate in 13 locations globally. We're currently deploying capital in 8, which means we work with, I would say, about 300 founders every 6 months. So we have a very good pulse of what's happening on the market. Also, being agnostic, we're not really biased by what we want to invest in. We look at absolutely all sectors and all kind of firms. And what we started increasingly seeing recently is, first of all, an increasing amount of companies are kind of B Corp by default or impact oriented by default. And that comes from the founders themselves. It's not driven by any other dynamic. It means the entrepreneurs these days are increasingly building impact oriented or sustainability oriented kind of businesses. And this takes up to 30% of the deal flow that we see coming in. So it's really fantastic to see. It's a wave of entrepreneurs who are tackling kind of the world most important challenges going forward. What we see a lot on our investment committees are firms that are tackling access to healthcare. And we made 2 investments in that space recently in the UK. Just improving access to healthcare, making it more universal, facilitating digital healthcare also has been a very important theme recently, obviously with COVID and with the logistical challenges of our daily lives. This has taken a lot of momentum recently. We also see a lot of work happening in the future of work, and we consider that to some extent as impact when it comes to creating systems or startups that cultivate networks that provide, let's say, fairer chances or less biased chances of evolving through the corporate ladder, for example, for employees. That's for us, that's very impactful, because we see that kind of underprivileged or underrepresented backgrounds have then access to the entire corporate ladder, and that's very interesting. So future of work as well is an important sector. We see a lot in the future of consumption, better consumption, let's say more environmentally friendly, more resource efficient, and we see this in kind of across sectors, from just sustainable e-commerce to very targeted FMCG goods, for example, so fast-moving consumer goods who are better for the environment with less plastic, less softer impact for the environment. So that's quite important on our investment committees. And then maybe 2 or 3 more sectors. We see a lot in the fintech space, and that's what I would call kind of there is a movement, there is a trend going on right now. The entire architecture of a more sustainable finance is being built. So the way the current financial world is complex, a similar structure is being built throughout reporting, ESG reporting, SaaS solutions to analyze a balance sheet, for example, and report accordingly, valuation models, better access to finance. This entire space, from the top allocators all the way to the corporate world, is being structured at the moment, and this is fascinating. This requires an entire ecosystem to be built, and in our interactions with other investors in the UK, other VC funds, we see that there's a lot of attention on that. This is being driven, I think, by all the stakeholders, from the consumers to the corporates themselves, but I would say more widely by the larger allocators who are financing innovation and who expect a more responsible finance to emerge. And then maybe last sector that we see is just a better use of resources, and that's across sector. So we've seen also kind of healthcare supply chain improvements in the hospital procurement industry, for example, which make that entire space reduce the information asymmetry you can have between the hospitals and the suppliers, for example, to make it more efficient, or also kind of hyper-local B2B commerce solutions to help reduce wastage, for example, in the food chain, or to make ordering or reordering or more efficient, or for particularly in the lockdown mode, for the local supply chain to remain active and remain so it can achieve its purpose, which is to give us consumers access to what we want to buy. So these are the main sectors: future of healthcare, future of work, better consumption, a lot in the fintech space and sustainable finance, and just more broadly, better use of resources.
Great, Antoine. I'm really liking it. So you currently invested in 2 startups in UK, right?
We have 20 firms in portfolio in the UK. We have 2 in the health tech space or digital healthcare. We have 2 in the future of work. We have 2 or 3 in the better consumption or fintech. We currently have one of our portfolios ongoing a crowdfunding round. The firm is called Yeezy, and what Yeezy does basically is at the consumer level, so you and me, to help us define our footprint on the environment at every purchase level and help us offset or change our behaviors to have lower footprint. And we think this is fantastic. We think this is very relevant for what consumers are looking for these days. Then they've been raising a crowdfunding round. They were raising £200,000 2 weeks ago, and they currently have secured $500,000. So this really translates the need from the consumers for this kind of solutions.
Yeah, and basically, I think the pandemic itself has accelerated the investments in the space.
Exactly, that's what we see. The pandemic creating a bit of, let's say, also a bit of stress on our economies and on the way we operate, has accelerated the trends on impact investments, but also on the entire digital innovation that we're seeing in our economies.
Absolutely. Digital innovation, digital transformation, everything has been accelerated like 10 years. Fast forward. Thank you, Antoine. Really enjoyed those insights from you. I'd like to ask about what has changed in terms of VC investments specifically after or during the pandemic, after the COVID-19. I mean, obviously, so investors thought that this is an interim temporary thing, which is gonna get better with time. So let's just sit back and wait. Or the investments continue, the deal flows continued, or what? Where there's some startups in early stages that obviously were less benefited than others. So what has changed? What's the investment sentiments like? Charlie, would you like to take this?
Sure, can do. So look, I think COVID, I think everyone on this panel has covered it. COVID essentially has shaped a new behavior for essentially anyone that's been impacted by it, albeit work from home or stay home for that matter. And how that has cascading effects both in the way we do work or future of healthcare, but also the way that we live as well. Yeah. And so I think the way that investors have shaped it, at least the ones I've noticed and the behaviors I've noticed in the 2 VC funds I was in during this time, because I was in one when it started and then I was in another now after it's kind of spread across the region. One of the biggest complaints we always find is that investors are, when COVID first came out, I would define the experience in 2 ways. One is when the COVID first came out and there was this mass uncertainty as to what the future will hold. There's not a lot of information in terms of the disease itself, and that people were still trying to figure out who are the winners and who are the losers. The obvious ones were, big losers were obviously in the travel space, entertainment space, places of that nature. So that funding almost stopped immediately, and the tap turned off until investors could understand better what that landscape looked like. Areas where there was more funding and double downs and everything, and those other behaviors shifted, were in the big winning spaces. So healthcare and education and fintech, for example, digital spaces, future for work. What I noticed especially is that there would be either a delay in investment or there would be a renegotiation to a lower valuation on the startups because there was additional pressures being laid. And that was at the beginning. Once people started to figure out how startups and businesses are going to be able to survive in this new normal, which is post-COVID. All of a sudden, the impacts were starting to be realized. The healthcare startups were booming. The e-commerce businesses in the Middle East were booming. And a lot of these businesses and these founders started to come back and say, no, sorry, the valuation's now doubled. It hasn't halved, it's now doubled. And so those types of industries started to really take off. And we see it both in public markets and we still see it in the private markets as well. The valuations for companies that have been well suited for this new environment have accelerated. And the valuations for those companies who are not well suited for this have either been forced to pivot to a different business model or completely shutter doors. Oftentimes we're finding founders are laying off employees and continuing to just survive on a founder's salary, if that. Or they're pausing business in general until the environment improves on a hopeful whim. So I think there's some clear winners and clear losers. And I think that's been, investors have reacted quite sensitively at the beginning. And now that they've kind of seen how this market works, they're taking smarter bets and they're a bit more measured in terms of their both pessimism and optimism as to how this will play out for the next 2 years.
Right. Great insights, Charlie. I really like that. The losers and the winners, and the clear winners are the fintech, health tech, ed tech, as you rightly said. So yeah, valuations have doubled. And the losers, obviously, the valuations have been halved or just totally gone down to zero. Unfortunately, can't do much, but thank you, Charlie, for that. So the next person I would like to ask this question to is Saul, because I understand Max is having a little bit of tooth problem today. So we'll come back to you a little later, Max. Just sit back and relax while I take this question with other speakers. Saul, over to you. How's the investment sentiments been in the last 3 to 6 months?
So whenever I'm on a panel, I always want to speak after Charlie because he pretty much covers it pretty well. It's the second time I haven't had much to add. I will try to add something though, nonetheless. I think that Charlie was absolutely right. What we saw in the beginning was a drastic pullback, from activity. Everybody's trying to figure out a tremendous amount of, uncertainty in the market. And whenever there's a lot of uncertainty, so, investors usually take a step back. Now, there was at the same time, at the beginning of this, the stock markets, had gone down for quite a while, a few weeks straight down. And then, but now you look at the markets, the markets have recovered, right? So you have this period of tremendous uncertainty. One of the big casualties of all this were people like myself who were trying to create a new fund. So first-time fund managers found it extremely difficult to raise money. But not only, so this is the second fund I'm working on. The first fund I started in January, we abandoned because we couldn't raise money. We were raising money for it. And then when COVID hit, it basically dried up. But this is an experience that, in speaking to a lot of the people in the community, in the venture community, I don't know what everybody else feels here, but a lot of people have told me, both in venture and in private equity, that the LP money has really also pulled back. So not only, and that's the cascading effect that I think Charlie mentioned, not only do you have uncertainty from the VC investing in the startup, or the private equity investor investing in the private equity company, although they suffered a little bit less, but you have the VCs not able to raise money from their limited partners as well, for the same reason. So the big companies, at the top of the pyramid, who've had a lot of experience, a lot of success, never have problems raising money. And we've seen a bunch of companies, raise new funds, billion-dollar funds, what have you. But it's the lower tier guys that are having more problem, the mid to bottom of the pyramid. So I think, but now, as Charlie said, I hate to, I should just not say anything and let it stand. But now what we're seeing is that there's still a amount of uncertainty, but that uncertainty has changed. Like now, we sort of are familiar with what it is. We don't know when it's going to end yet. We don't know when there's going to be a vaccine. We don't know how long this is going to last. There are winners. There are clear winners, and there are clear losers. And now people are looking towards the day after. Right? How do I set myself up now? What are the investments that I want to make in the coming months, or the weeks or months, or whatever you think your horizon is, that will be the winners for the day after? And that's a big change, because even if you looked at the statistics, even the companies that said they were investing right after COVID began, a lot of those investments were in the portfolio investments. They weren't new investments. But now we're seeing a trend towards new investments again, right? And a look to, okay, let's see what the day after looks like. It was too early then, but now it's the right time to be doing that. So I think that's the only thing I can add that Charlie didn't say, and I'll let somebody else try to find something new to say.
That's all. I mean, very great points. I just want to ask you that you started a fund in January, which dried up because of COVID.
Yeah.
And you started a second fund. Was it like, when did you start the second fund?
So we started, I left the company I was working for in December, and I started a new fund in January. We started funding it in mid-January until through the end of February. We're getting some really good responses and beginnings of soft commitments. And then, just as I was kind of signing people up for those commitments, COVID hit. And I literally had an LP tell me, when I went to see him on the last day that I could possibly see somebody before I was locked down. We had a 3-month lockdown here. He said, I don't know if I'm going to be alive in 6 months. I can't make any investments now. And I thought that was a bit dramatic, but
That was.
like what do you, at that time, there was so much uncertainty, and everybody talked about 20 million deaths around the world, and plague-like, Black Plague-like, situation. That what are you going to say to that? I mean, he was in a high-risk group. Well, whatever, it happens. So after that happened, I surveyed the LPs, and I basically got the same response: this is not the right time. So I put it on hold. About 3 months ago, a friend of mine came to me, and he had an idea for a fund that was a social impact fund.
Right.
And my feeling was that was something, and that feeling has been backed up, that was something that we could raise money for now, particularly because it was social impact.
Right.
When you look at venture philanthropy, that has reduced as well. But again, that's coming back now. So there's been a shift from, a tremendous amount of uncertainty that basically said, okay, let's, take a break right now and figure out what's going on, to a cautious optimism that's, okay, we don't know if we've turned the corner yet or not, but whether we have or whether we haven't, if we haven't, we probably will anytime now. And there's a light at the end of the tunnel now, and now we can see what we can do.
Right.
So the change in focus, and the change in timing, made it a successful idea.
Great. Good to know that. I mean, that's obviously a light at the end of the tunnel for sure. Thank you. So, Stanley, over to you. What has changed, and then investment sentiments as per you?
Yeah, I mean, I think we must have been a little bit fortunate because, our private equity funds are listed funds. So in a way, we didn't see a lot of pooling LPs or investors pulling out their capital. Funny enough, I think some of them actually see our investment themes almost like a flight to capital. Because when you think about the transition, we invest in fintech and agriculture and renewable energy, which are our main 3 verticals. So, most investors were actually comfortable that was where the market was moving. I do have to, follow on Saul's sentiment, is that we found ourselves investing more money and follow-on investments in our portfolio companies than actually looking at new transactions, which was also kind of a pain for people like Saul, who were actually coming up with new initiatives. But I think, like, you know, right now the taps are open, because now you find that a lot of the private equity funds, they held back too much capital. Now they got too much liquidity, so they need to place it. So right now, what we're finding is that the tap is starting to open, where now there is a lot of negative interest carried in some of these private equity fund RRRs that they need to actually start placing. So I think this is the right time for entrepreneurs to actually start applying. But I do think, like, you know, in the end, investors are starting to relax their verticals a little. So I think the market is open now, from what I can see from our side.
Awesome. So entrepreneurs who are watching us today, Stanley said markets are opening up. So watch out. Thank you, Stanley. Thank you for that. So next, I would like to go with Antoine.
Yes, I mean, a lot has been said on that topic already. Maybe a few points which are kind of very particular to the way we operate. When COVID arrived, we work with the entrepreneurs, we host them, we work with them on a daily basis. So we just continued. We knew it was a lot of uncertainty, but we just kept working with them, kept supporting them in building their businesses. And 2 months later, across the entire portfolio globally, we had made 71 investments between early March and end of April.
Wow, that's a big
which is
number.
very trendy in COVID times, indeed. And we invested across all the verticals we mentioned earlier. So that's something we may have been a bit contrarian on. And if I look at our portfolio, obviously in our portfolio we've seen losers, a few. We've seen winners mostly, and I would say that's because the kind of businesses we invest as investors around this table today, a lot of them are surfing on the new trends going forward, on where the economy is going. And as you mentioned earlier, we've just accelerated by 10 years. So what we saw between March and end of June, we saw a similar, let's say, a trend happening in our portfolio, where our portfolio managed to raise 5 times the amount of money we had invested in there in a matter of 4 months in full COVID times. And that's because what we understood is that, 1, the best businesses still get access to capital. 2, all the businesses who have a very strong angle or a very strong play with the future of the economy still attract capital. And maybe the last one is, I remember being listening to BlackRock's CEO when he started their annual meeting in, I think it was in June. His opening sentence was around their responsibility in making sustainable investment and in making sure that ESG were part of their core deployment strategy.
Right.
I'm not here to judge whether BlackRock is why they're talking about that, but I think what it really mentions, what it really translates, is the interest of the entire financial industry for this kind of investments, which means that capital is going into that space, no matter what. Investors need to keep deploying. As Stanley was mentioning, interest rates are going down below 0. So the financial economy, the financial systems need to keep working. And we're expecting, and we've seen that over the summer, where VC funds actually felt that deal flow for them was a bit lower than expected. Right. Because the entrepreneurs were holding on raising a round. So we expect a very busy kind of autumn and winter. We think that a lot of the entrepreneurs who were holding on raising a round are actually going to go to market during the autumn. So it should be interesting kind of rounds, is interesting developments happening here in the UK ecosystem. Wow,
Antoine, I'm really liking it. I mean, what's the motto of your company? Like, you made so many investments during a crisis. So was it like something through?
It's very simple. We stepped back a little bit, looked at what are the macro conditions, and what we're seeing in the macro conditions is that public markets are very hard to interpret nowadays, and seems they were already overpriced in terms of the value of the assets before COVID arrived, And the small adjustment in COVID and back to kind of pre-COVID prices now seems to be irrelevant on one hand. So broader kind of financial market trends seems that public markets are overpriced, and that usually creates opportunities in private markets where assets are usually more reasonably priced, and that's where capital is headed toward because it costs less to buy positions there. And you see that translation into kind of the changes in the 401k regulation in the US, where pension funds have now the right to invest in private markets because they need to deliver 7% a year and they can't do it anymore on public markets. So they need to go a bit beyond, find better price opportunities. And that's happening in the PE world and in the VC world. So that's a very good opportunity for all of us here around the table who are deploying capital in those private markets. So that's one. I think the second trend that we've seen at work is the economy is not going to stop. The way we work and the innovation is not going to stop, and it's needed. And the best way to do so, particularly in a market that's a bit stressed, we can't really expect the corporate world to innovate and to be at the forefront. So a lot of that innovation, a lot of these new ways of working, for example, are being defined by the entrepreneurs. And we work with them day one. So we felt we actually had a responsibility on just working, keep doing what we were doing, keep supporting them because they're building the companies of tomorrow. And maybe the landmark kind of brands and landmark startups that we will all be talking about in 10 years from now have been built over the past 6 months. And that's fascinating.
Absolutely, absolutely. I really like the way you think, the way you've analyzed the markets, the public and the private, and the way you think for the future of work as well. Thank you, Antoine, for sharing those insights. Very helpful for the entrepreneurs and the founders who are watching us today. Thank you so much. So Max, I would like to quickly ask you on your thoughts about investments, and I'll open the floor for all of the speakers to ask a question, one or two to each other, just to, if any burning questions are there. So Max, before that, I just want to know quickly about your thoughts about the investments sentiments in the last 6 months.
Yeah, sure. Thank you so much. I think one thing I've been thinking a lot about, and this came from actually watching an online sharing session from Andrew Yang and also a few other people around UBI, Universal Basic Income, is actually the process by which we understand UBI. I think it's just to echo a little bit what Antoine was saying previously. COVID is definitely forced us to reconsider, what kind of businesses we should go into and what are available. And I think Europe has this amazing conscientious mindset where they understand that if you sort of provide a big floor to people, right, then people's daily needs are taken care of. And then, on top of that, they're able to pursue things that are not survival based. And I think a lot of the unsustainable business models and unsustainable business practices, unfortunately, are all very survival based. They're very zero sum, me die or you die kind of business models. And I think UBI has a place in the world. And I think UBI also will actually drive a lot of innovation and also startup growth, because if your daily needs are taken care of, then you're naturally primed to solve problems, versus if you're trying to feed yourself and your family, then you'll be very hard pressed to think in a very altruistic manner. The other thing is, and going to what Antoine mentioned about the portfolio company Yize doing crowd equity financing, is I think that actually in the post-COVID world, I think crowd equity financing can be a more popular means of approach. And this actually has certain parallels to the crypto world, right? Meanwhile, while the sort of stock markets have been doing their traditional thing, the DeFi movement has aggregated quietly about $9 billion in market cap, right? Up from $300 million just 3 months ago. So that's maybe more money than all the VC funds have raised this year. And I don't know the statistics, right? It's maybe comparable. It's on the same order of magnitude. So I would say that being able to unlock the ability of individuals to participate, right, and actually giving them the tools to participate could be really, really powerful, especially if startups are solving real problems. If we think about the way that corporates as an entity, a legal entity, has been organized, there's usually been a divorce between the people who own the company, who actually will stand to profit from it, and the people who use it, right? And so largely to today, there's been a relatively exploitative mechanism by which the owners have gained wealth at the expense of the users. And that's totally screwed up, right? That's not something we can continue doing ad infinitum. So I think we're at this transition point where we say, how can we actually get all the powerful users, the people who bring value to a company, to become the co-owners, right? And as a result, you have shared incentives, shared alignment, natural marketing strategies, right? And also, less exploitative behavior. And if your user base is diverse, then you're naturally a diverse company, right? And so I think that is in some ways where I see the traditional investment world, right, meet the sort of crazy, experimentation in the crypto world, because the cool thing about crypto, and is something that's not widely practiced yet but could be done, is that you can actually reward the people who use your services with some aspect of governance in your protocol. And so naturally you're actually creating stakeholders the more they use your service. And I think that mechanism, as shown in DeFi, has been really, really successful. And I think we hopefully see more of those type of fundraising models in the future.
Absolutely. DeFi is the buzzword right now. As you rightly said, the users are the stakeholders, and that's the beauty about being on a DeFi platform. Thank you, Max. So just for conscious of the time, any burning questions for your co-speakers? Anyone? Any questions from anyone?
I have a question for Stanley, actually. A question for Stanley. Just, I think, being an investment banker actually for the development market is a really fascinating job. So I'd love to understand, how do you sort of usually, how do you position the projects you bring to market, right? And how do you sort of tell their stories to other people? And do you find the narrative of investing in Africa, in other emerging markets changing, in 2020 versus I think maybe a few years ago? And so where do you see the sort of traction in investors' minds about investing?
Yeah, I mean, I think, in the end of the day, the whole point is that investors are more interested, because the whole thing is that most of the impact investors initially were more the foundational capital givers who were happy to give away their money for grants, and they actually transitioned into the impact space. What they've actually done is that they've actually provided the risk capital in the beginning in order to enable commercial investors to come in now. So when we talk about Africa, for example, like Africa is being fed on so much donation capital for so long that although it was not effective, it was able to build some form of foundation to enable, let's say, the impact phase investors to come in. So I think investors are starting to see Africa on a different vertical, where before it was more, let's give donation and help, to more investment, which will enable the local economy to develop from the bottom up. So I think the whole idea of impact investing is changing the mindset of investors towards the economy. So I think that is what is happening. Do you know what? I'm going to be honest with you. I do find that it is a little bit dangerous right now, because the fact of the matter is that there's too many equity capital going into impact investment in Africa, which actually crowds out local equity investors to actually get hold of those transitional economy assets. So for us, that is the danger that needs to be actually looked at now. But I think right now the flow seems positive.
Wow. So that great insights from Africa over there. Thank you, Stanley, for sharing that Africa insights with us. So yeah, it just brings us to the end of the show. I really enjoyed the show, basically because of the diversified panel from different countries that we had, because we are Asian, like I'm based in Asia. I've spoken to Max before, but having people from all over the world makes the panel very special, especially for me as a host. Thank you so much. I'd like to know closing remarks from each of you, especially the new speakers on a panel. Saul, I'd like to start with you. What are your closing remarks and your feedback about Vctv?
First of all, again, I want to thank you for inviting me. Thank everybody for allowing me to be part of this STEAM panel. I think that the world of social impact is healthy, even though the people that need it maybe aren't as healthy as the world. But I think the world of social impact is a healthy one. It's something that hasn't suffered as much, in my estimation, from the general market malaise of COVID. And I think, as we've said before, I think we're not sure exactly where we are yet, but there's a light at the end of the tunnel. And I think that people are looking now to the future and, past.
Oh, you went on mute.
Sorry, I don't know how that happened. Anyway, but we went past the uncertainty of where we were into a different kind of uncertainty, but a more positive one. And I think that that's guiding us now. So that's my closing comment.
Okay. So what's the feedback about VCTV? You're attending VCTV for the first time.
Sorry.
So what's your feedback about VCTV?
This is great. I mean, I've been watching some of these programs. So I was really thrilled to be part of one. So this is wonderful. I think it's a great service you guys are running. Wonderful.
Great. Good to know that you've been watching us before.
Yeah.
Thank you. Charlie, what are your feedback about VCTV?
VCTV and closing remarks?
Yes, please.
Sure. Listen, I'm pleased to be here. I've learned a tremendous amount from the other speakers on this particular show, and I hope to come back. So that's my closing on VCTV. I think it's very interesting, and especially to hear firsthand from some of these experiences in the various locations of the world, and how there are slight nuances in each spot. It's awesome. It's really invaluable information to be shared. Related to just closing remarks, I think when there are difficult times and tribulations, people become more creative with investment. They find alternative asset classes, and they find alternative ways and tools to potentially invest in those. I think Antoine, Max, and Stanley and Saul have all highlighted how those have changed, and I think we will continue to use one of our most powerful tools, which is ingenuity and being creative in how to maintain wealth or improve lives. So impact investment has a place in that, and I think that's a good part, and optimistic outlook.
Great. Thank you, Charlie, and hope to see you in Singapore someday. Thank you.
Yeah, thanks. Take care.
Next, Stanley, over to you.
Yeah, I mean, just following on Saul and Charlie's sentiment, I'd like to show my gratitude for being invited to share our story on this platform. I think what you guys are trying to do in bringing the different intellect together to actually have a discussion on the topic is amazing, and I do wish you all the best going forward. I think on a closing remark, I think people think of impact investing as this on vertical, but I think people have to start thinking about impact investing as the transitional state, the transitional investment needed to get us to where we need to operate in order to reach carbon neutral. So it is something that has to happen. So when we start thinking about it like that, the mindset shifts a little bit. Thank you very much again for having me.
Excellent. Thank you. Thank you so much, Stanley. Antoine?
Yes, I'm here. And thanks a lot for having me here. I think this is a fantastic forum. It's a great forum for kind of us as investors to share and to discuss how we look at our thesis. I think for the entrepreneurs, and that's what I would like to focus on, it's particularly important, I think, to listen to how investors and potential investors in their businesses look at the world and look at the current situation. I think it's a very good exercise to do than to get a feeling of what's the mood by hearing directly from them. And I would maybe last closing remark for all the entrepreneurs who are listening to us today. I think that if today is a very uncertain world, what is sure is that we still need major problems to be solved. So if you have the drive to do so, if you have the courage to do so, you should just proceed and get started. And there are plenty of ways to get support out there. So don't take a back foot and keep going at it. The world needs you to come and solve all these challenges.
Very positive, Antoine. Thank you so much for with that closing remarks. So entrepreneurs who are watching us today, please listen to what Antoine said and others have said on the panel today. Don't stop. I mean, this is the right time to do something, make or break something. And you can pitch, you can actually reach out to our investors through our website, which I'm going to tell later. Max, very quickly, you've been on our show before. I know that you like the show, that's you come back, but closing remarks for the evening.
Yeah, thank you so much. And And I guess one is, thank you, Sani, for hosting us. You're always a great host, super full of energy, and you create a really lively environment for discussion. So you're really able to have every person really show and share something useful. So I think that's been really positive. I want to just say to all the people watching this, both entrepreneurs and also other investors, that I think at the end of the day, money is a tool, right? The purpose of money is really to sort of finance things that we need as a civilization. And I think COVID and climate change are huge problems that we face. And so in the face of these problems, the money that we deploy and also the money that we raise, if you're solving a real problem, the money is going to be there for sure. So I think, during the downturns, during the economic hardships where people build, the ability to have resilience, this is actually where the best entrepreneurs are born. And if you are continuing down that path, then know that we support you 100%, and hopefully get a chance to talk to you guys. Thank you.
Excellent. Thank you. Thank you so much. Thank you so much for your very supportive words for the entrepreneurs who are watching us today. So entrepreneurs who are watching us today, you can reach out to investors at www.latoken.com/profiles. All the profiles are featured along with their portfolio companies, along with the kind of the ticket sizes, all the details that you can think of are all there. And for investors and speakers, for you also, we have an opportunity to share, because obviously you are sector agnostic, some of you are technology agnostic as well, and you would probably, obviously you would have bring in more experience on other panels that we have, because we run the shows Monday to Friday, and we cover whole lot of topics, and you can see those topics at www.latoken.com/events. Please feel free to reach out to me or my colleague Carol, who just emailed you all the details, if you would like to speak on other panels and share your knowledge with the entrepreneurs who are actually watching you speak and share your insights. Okay, now having said that, we come to the end of the show. Thank you so much for your time, for dialing in from Netherlands, London, Israel, Hong Kong, and Singapore. I love the panel today. I had a lot of fun, and my Monday has just, I feel like a weekend. Anyways, thank you so much. Stay safe, stay connected, and hopefully I'll see you all on a different panel. Take care. Bye.